Good morning. Happy almost Groundhog Day. Welcome to the 16th Annual Groundhog Day Economic Forecast with Michael Weidokal. I'm John Kelly from Tuscarawas County Economic Development. Glad to have everyone here. We've got a wide spread of people from all over East Central Ohio, and glad you're here to learn and to grow. And Michael and I were just talking about how we have to, in this day and age, we have to constantly adapt and evolve and learn and get new skills because the world is changing. So I hope you enjoyed some breakfast. That was compliments of ChemSpec Group up here, so let's give them a thank you. I want to invite Trent Troyer from the bank here to do a welcome.
Thank you, John. Good morning. As John said, I'm Trent Troyer. I'm the president and CEO here at First Federal, and we are pleased to be able to host you here at this event. And I think last year was the first time we hosted here, and it was shortly after we opened. We've been open now just about 15 months, and this is maybe the 51st or 52nd event we've held in this space. So we're just thrilled to be able to give back to the community and glad that you're here. Thank you.
Thanks, Trent. I do want to make a mention out on the table. There's some flyers for the export internship program that runs in the summertime. If you do work overseas or you're thinking about doing work overseas, you can get a specially trained college student to come and do an internship in the summer, and somebody it's part of Ohio Department of Development, and they couldn't make it here today, so we do have some flyers out there, and I know at least one company in the community is in that program. So I want to welcome Michael Weidokal, Director of the International Strategic Analysis Group, and you've all seen him before, and it's a fascinating world tour of economic realities and complexities. So ISA and Michael and his group do economic forecasting, country intelligence reports, advising for companies who do business internationally, and I really appreciate you coming back home to Northeast Ohio and sharing your wisdom with us. So thank you and welcome.
Great. Well, good morning, everyone. We're about to ruin your morning by talking about the economy for an hour, so sorry about that. Maybe the breakfast before talking about the economy is not the best idea. It won't be that depressing. There's some lights at the end of the tunnel. First of all, it's good to it's good to see some familiar faces here. This is the 16th year. This event is old enough to drive now. I was mentioning to John earlier, this is the longest continuous event I do. I speak all over the world, and there's some of them are now 11 years, 12 years, but none of them have reached 16. I don't remember exactly how it started. I do remember speaking down at Ohio State early on in ISA's existence, and somebody from this region, I can't even remember who it was now, saw me speak and would you like to come to Dover, Ohio, and speak to my economic group, and Harry then set it up, Harry Eden. And I think there were 10 people, 12 people in this little conference room somewhere over by the river. My geography knowledge of Dover is limited. But it was a small event, and every year we've gotten bigger and bigger, and here we are in this great facility. Back in Dover, we were across New Philadelphia for much of this event's history, and we've been now 2 years back in Dover. So it's good to see everybody. I wish I had some better news than I'm going to give you. It's going to be a challenging year, let's just say that. Now, honestly, let's get started with a bit of good news. 2022 ended pretty well. I mean, you look at the numbers that came out in the fourth quarter, both in the US, in China, in Germany, and other European countries, they were actually better than expected. So 2022 was not a bad year, despite all the challenges I'm about to talk about. It was pretty good. So 2022, pretty decent year. 2023 is going to be a challenge. I'm not going to sugarcoat it. It's going to look like a brown season. There's going to be a lot of upturn. You knew that was coming. It's going to be a lot of turmoil. There's going to be a lot of unrest, a lot of throwing things at the television. But again, like I said, I think after we get through especially the early part of this year, I think we're starting to look at a better economic situation going into 2024. The structure of the presentation, now some of you have been here 16 years, I think, or at least 14 or 15. You know about ISA. Before I get started, just have a visit of our website if you want to learn more about ISA. It's isa-world.com, our economic forecasting, political forecasting advisory services. If you want to learn more, visit the website and contact me. But I'm not going to sit here and sell my company the whole time. I am going to talk about what we're going to talk about today. And the structure today is a little bit different. I try to change it up every year. We're going to talk about where we are right now, because there's a number of big issues facing the economy in 2023 that we need to address right off the bat. I'm going to talk about how we got here, why the situation is what it is, some of the uncertainty and unrest we have. I'm going to talk about where the economy is going, look at some of our economic forecasts like we always do, including going around the world and seeing how different parts of the world are faring in this current economic environment. And we're actually going to talk a little bit about how businesses, communities, even individuals can succeed in this challenging economy of the future. And then as always, you guys can send me your easy to answer questions at the end, no difficult ones, nothing challenging. It's early in the morning. But let's get started. A lot to talk about. Where are we right now? Well, like I said, 2022 ended on a pretty good note when 3 of the 4 largest economies in the world reported higher than expected growth. U.S. economy grew by 2.1% last year. Now that's not historically nothing to write home about, but in this environment, it's a pretty good result. It's coming off the back of 5.9% growth in 2021. Obviously, we had a recession in 2020, but it's a decent number. It was driven by an increase in consumer spending towards the end of the year, which was a little bit better than expected. Of course, remember, consumer spending accounts for 2/3 of the U.S. economy. So if consumer spending is strong, our economy is going to be strong. And it was stronger than expected at the end of last year. That's good news. The year ended on a good note. Now we're entering 2023. The big question is, of course, are we headed for a recession? And the answer is, I don't know. I don't know. It's really going to be close. It's going to be a close run thing. There is a possibility. We're right about 50% as far as recession risk is right now. The recession risk has come down a little bit, quite frankly. We're a little bit more optimistic about the state of the economy this year, particularly on the consumer side. We'll talk about some of those reasons going forward. But optimism is creeping into our forecast. I know you guys are used to being negative all the time. There is some optimism creeping into the forecast for 2023 and certainly beyond. But let's get into it. What's going on in the world? The economy right now is being impacted by a number of factors, a lot of them negative, quite frankly. Of course, we're in the midst of what is the biggest period of economic turmoil since the Second World War. And what I've been saying, you probably heard me say this last year, think of the COVID-19 pandemic's impact on the economy as something similar to a world war's impact on the global economy. The disruptions that we've seen during COVID-19 are akin to what we saw after the Second World War, after the First World War. The disruptions were that great. So we are in a period of turmoil economically that we haven't seen since the 1940s. And that turmoil continues to impact the economy today, even though we live with COVID now, and with the exception of China, which has hundreds of millions of cases at the moment because they just opened up. The world has moved on, but it's still, the lingering ramifications of the pandemic are still being felt by the economy. So there's a number of challenges we're facing both now and in the coming years. The downwards trend in economic growth, we talked about this, you've heard me talk about this for a long time. Economic growth has been slowing, particularly in the US and other rich countries, for decades now. We are not growing like previous generations grew here in the United States, nor in Europe, nor in Japan, or any of the other rich world countries. So 2023, I said it's going to be a challenging year, but I promise when I come back next year, the outlook's going to be a little bit rosier. We'll be talking about some more positive developments for the economy, I'm pretty certain, next year. So what are some of the things that are impacting the economy right now? We got to start with politics, both internal and external. Politics right now, we look at internal politics, not just here in the US, but in many major economies, are more uncertain than at any time in recent decades. We see presidential systems producing leaders that have challenged those systems' long-term viability. We see parliamentary systems unable to form governments, Some countries are on their 4th or 5th parliamentary election in the last 2 years just because they can't form new governments. I'm thinking of places like Israel, Bulgaria, et cetera. So the political systems that have served us pretty well, quite frankly, economically for decades, are now under stress. And it's not just internally, of course, it's externally. You remember we were talking about the potential last year for a war in Ukraine. We were sitting here saying the Russians had massed their troops on the Ukrainian border. It was really it was about a 50-50 thing. Were they going to send the troops in? Obviously, they did. We're 11 months into the war. In fact, I was speaking on February 24th at an oil industry conference in Los Angeles the day of the invasion. So you can imagine my speech had to be remade that morning because everything had changed because the Russians had gone into Ukraine, and the impact on the oil and gas industry was substantial. That war is still going on. We're expecting some major battles in the coming months. The Russians clearly are going to launch a new offensive in the spring. The Ukrainians are now getting tanks and on top of everything else they've gotten from the West. So the outcome of that war remains highly uncertain. And the impact that's going to have on global stability, on the global economy, remains uncertain because we just don't know how that battle is going to play out. And that's not the only geopolitical issue we're looking at. Of course, US-Chinese relations. I talk about that every year when I'm here because those are the two dominant economies in the world today. Relations between the US and China remain strained. That said, I've told you many times that's the one thing the Republicans and Democrats can agree upon, and that's the policy towards China. That's economic policy, trade policy, geopolitical policy towards China. Pretty consistent across administrations in the US. So a lot of these geopolitical tensions are starting to impact the economy as well, mostly in a negative factor. It's been more than a century since the world's two largest economies have been so at odds with one another in a political context. So that obviously has a big impact. Economically, the big issue, of course, has been inflation. Now, there's some good news here. Certainly in the US, inflation has come down. We're down to 6.5% inflation. We're down from over 9% earlier. We've seen a downwards trend in inflation in some European countries, some other parts of the world. So it looks like inflation has peaked. Certainly here in the US, I'm pretty confident it's peaked. We're forecasting inflation to trend downwards. I'm actually pretty bullish on inflation, thinking it's going to fall faster than many other economists do. Certainly the labor side inflation is there because of wage growth, but many of the other factors that impact inflation I'm expecting to continue to recede. We're looking at inflation probably somewhere below 4% by the end of the year. We're looking at between 3.5 and 3.8%, which would be, considering where we were, would be a good thing. It's still above the 2% target of the Fed. But it's a positive development nevertheless. There are still risks, don't get me wrong. The war in Ukraine can go a certain way that could lead to a huge increase in commodity prices, which there are still external risks here. But it looks like the worst days of inflation are behind us. They're going to remain above average well into 2024, inflation rates that is, but the worst is behind us, and that's a very positive development. Of course, inflation has led to much higher interest rate hikes. We've seen interest rates go up significantly. Now, we are now expecting only a 25 basis point rate hike coming up from the Fed because of these bigger than expected declines in inflation. Other central banks around the world are still raising interest rates somewhat substantially. The European Central Bank has already announced they're going to do 250 basis point rate hikes in February and in March. The key issue here is that the impact of these rate hikes is going to be felt in 2023. While the main hikes were enacted in 2022, the impact is going to be felt in 2023 on real estate, commercial lending, et cetera. So you're going to see the negative impact on the economy from last year's rate hikes this year. And that's the main reason why we're concerned about the economic growth outlook for 2023, and that's the main reason why there's a 50% chance of a recession in our eyes. It does look like the rate hikes are going to come to an end, certainly here in North America, sooner than expected. So we might see a couple more rate hikes, small ones, 25 basis point hikes. And if inflation continues declining like we expect, it's conceivable that rate cuts are enacted by the end of this year or early 2024. And that would be good news for the economy. We're going to need that boost after what's going to happen in the coming months. In other parts of the world, there's a bigger fear about inflation. For example, in Europe, where most of the inflation is energy driven, and the war in Ukraine is still going on, you could see continued rate hikes, substantial rate hikes, 50 basis point rate hikes for some time to come. That would have a negative impact on their economy. So we'll see how that plays out. In the US, we're expecting rate hikes to end pretty soon. In other parts of the world, they could persist for a while. except for Japan, who still have their negative interest rates there. But everyone else has been raising. Another big issue, and this is in fact, as far as our region is concerned, and whether we're looking at Northeast Ohio, you guys, how do you classify yourself? East Central Ohio? Am I right, or Northeast Ohio?
Go both ways.
Yeah. Okay. Too much information. It's a crossroads, kind of. Yeah. Okay. I spoke at Baldwin Wallace on Wednesday, and Bill Kaler, who's the head of Team NEO, he does a talk about the local economy. I do the global, and we have the head of finance do the U.S. economy. And he was saying right now there are 50,000 missing workers in Northeast Ohio, so the 14-county region he covers. So labor shortages are the #1 issue, and it's not just here; it's everywhere. I remember going back to China in the 1990s, and you'd be outside a soccer stadium. There'd be tens of thousands of people on a Monday morning waiting to get hired to go work somewhere. Now China, of course, as you've heard, their population is shrinking, and working age population's been shrinking for a decade. Labor shortages are a thing that are here. They're a thing that's going to persist. Look at those unemployment rates. And we hear in the news all these big job cuts, right? Goldman Sachs, Amazon, Google, et cetera. We're still only expecting the unemployment rate at its worst to go up to maybe 4.1, 4.2%. Imagine if we had this economic climate in let's say 83, the unemployment rate would go up to 11, 12% pretty easily. But because of this new demographics situation we have, unemployment is here to stay, and labor shortages are here to stay. And that's really been having a big impact on the economy. It's had a big impact on inflation, and it's really holding back a lot of businesses and regions' ability to grow, because they have the products in place, they have the services, they have the technology, the ideas. They don't have the people to implement them. So how are they going to do that in the future? Well, we'll talk about it in a little bit. It's going to be a big challenge. A positive note on supply chains, if you remember, we talked about this last year here, how bad the supply chain situation was. It has improved significantly. Costs have come down. Delays have come down. For me, the big issue here is not that that's happened. It's that businesses now have in their head that these supply chains that have been in place for decades, these global supply chains, are no longer as reliable as they were. And so now we're talking about a lot of investment coming back to regions where it maybe had left in previous decades. This is a big issue for Ohio, obviously. But the fear of future supply chain disruptions is changing the dynamic of business investment, particularly in the manufacturing sector. And we're hoping to reap some of the benefits for that here in Ohio, quite frankly. Now, we don't have the workers for it, so it's all well and good that businesses want to bring manufacturing back, but are we going to be able to? We'll see. Productivity, another thing. This is what I've talked about in the past. This is the key to our economic growth in the future, being productive. This chart at the bottom is interesting. This is for the US. We talked about how during the early days of COVID, productivity finally bounced back. It had been going down, which we'll talk about. But look what's happened since then. Productivity growth has really fallen sharply. And that's if you're an economist like myself, that's a very worrying sign. We need productivity growth to expand our economy in the future, because there's less workers, trade and investment isn't growing as fast as it used to. We need to boost productivity, but productivity numbers have been terrible. And this isn't just a US phenomenon, this is happening all over the world. You can blame it on, we had the information revolution. Everybody thought that was going to lead to a productivity breakthrough, right? It led to people playing solitaire in their office and watching TikTok and YouTube videos now. And that's the reality of productivity these days. It's a big concern. Now, we have hope, right? There's artificial intelligence, there's 3D printing, there's all this stuff. Maybe that's going to lead to a revolution in productivity. We'll see. Nothing else has done so in recent decades, but we can hope. Global trade and investment, we talked about how that had been depressed in recent years. There was a pretty strong bounce back in global trade in the wake of the pandemic, after 2020's disruptions. A lot of that had to do with higher commodity prices, but it also had to do with a lot of pent-up demand. We're hoping that can continue. That can be a definite driver of growth. It has been a driver of growth in recent decades, trade and foreign trade and international and foreign investment. But as you can see, we're really coming out of a period where that had been quite low, quite disappointing. Is this stronger growth we saw in 2021 and 2022 a sign of renewed confidence in trade and investment? I'm not sure. We have to see. We've seen the numbers in recent months start to slip, which is a little bit concerning, but it's expected when the economy is in such a dire straits. But we'll hope. We can hope, right? Of course, a big issue we talk about is the environment. This is becoming an ever bigger issue. I know up in Northeast Ohio, this is going to be the focus of their efforts to attract investment in the coming years, particularly taking advantage of our region's abundance of water and land and natural resources and our, let's say, resiliency in the face of climate change. There have been studies that have come out recently that show there's no place on Earth more resilient to climate change than the Great Lakes region of the United States and Canada because of our lack of natural disasters. None of you have been hit by a tornado, I hope. Okay. Then our lack of natural disasters, our abundant water resources, our wind. I know this is considered a relatively gray part of the world, but we have 400 more hours of sun than Paris, France, or in many other parts of the world. So we do actually have the potential for solar power. We have wind power. We have abundant water. We have abundant land. We have some of the best land in the world for agriculture. So when businesses are now looking, saying, okay, we have both government regulations telling us we have to be investing in more environmentally sustainable ways. We have activist investors telling us we have to. We have customers telling us we want to know what you're doing about the environment. This is a region that can attract a lot of investment because we can go and say, look, we have the water. We're resilient to climate change. If you want to invest in Arizona, you want to invest in Florida, you want to invest in California, good luck, right? Good luck with all the natural disasters you're going to face, the lack of water, et cetera. Come to the Midwest, come to places like East Central Ohio or Northeast Ohio, whichever way you go. And we can guarantee you have a much more sustainable footprint by investing here. And that's a real selling point for this region. And I know that a lot of the public organizations, the government organizations in Ohio are going to focus heavily on this in the coming years as a selling point for our region, for both businesses here in the US and for businesses around the world. So while it's a big challenge for the global economy, clearly this is a big challenge, but it is a big opportunity for our region at the moment. So what's happened then in recent years? Again, I've cautioned against looking at quarterly data or even yearly data during the pandemic and after the pandemic just because the numbers are so volatile. So what I do there is I take the average growth rates of the last 4 years. So remember, the economy was already slowing in 2019. The global economy was headed for a big slowdown even before COVID hit. And you can see the US hasn't done that poorly when compared to its peers. Those are the 10 largest rich countries in the world. US economy over the last 4 years has grown 1.7% per year. Nothing spectacular, clearly, historically, but when you compare it to other rich countries, it's a pretty decent result. When you see what's happened in Europe, when you see what's happened in Japan, the US has done relatively well. That's due in large part to a couple things. One, the resiliency of US consumers. A lot of money, of course, was put in the pockets of US consumers. 2 stimulus packages under the Trump administration, the third one under the Biden administration. A lot of money put in people's pockets. Also because the US has such a high profile position in high-tech, high-growth sectors. That did very well during the pandemic. So the US economy was pretty well placed to deal with the pandemic, much better than economies that were dependent upon tourism and exports to generate growth, which those were severely disrupted by the pandemic. So a pretty bleak picture when you look at the last few years for the rich countries of the world. But when you look at it from a US perspective, didn't do so badly during the years of the pandemic. Emerging markets, it's kind of similar. The numbers are a little bit higher for some of them, but these are significantly lower growth rates than they had before the pandemic. Some regions, in fact, have really struggled. We'll talk about those in a little bit. It really depended upon how severe the disruptions from the pandemic were on the population and on the businesses in different emerging markets. So when we look at the near term, clearly the impact of the disruptions caused by the pandemic are still being felt even in 2023, even as we've learned to live with COVID. They've led to what is already an end to what was the recovery from the pandemic. We're looking again, like I said, at a pretty difficult year this year. The risk levels are pretty high, in fact as high as any time since I've been doing this, and it's been 20 years now. And we're looking for a relatively uneven recovery beginning later this year, a recovery from what's coming in the coming months by the end of this year and into 2024. So how did we get here? right? How did we get to this stage where we're dealing with such a high level of risk and so many challenges facing businesses and facing both the economy here in this region and around the rest of the country and the world? Well, there's been some trends that have been in place well before COVID. A lot of people just tend to blame COVID for everything. We don't have workers because of COVID. Politics is crazy because of COVID. These things have been happening well before we ever heard of something called COVID-19. We talked about the trend in economic growth away from developed countries towards emerging markets. We have big changes in demographics and globalization. And of course, the environment. These changes have all been coming. These are all things that if you were at some of those early events 14, 15, 16 years ago, you heard me talk about some of these things. We knew some of them were coming. I can remember people, in fact, at this event, probably in the late 2000s, before the global financial crisis in 2008, coming up to me and saying, I can't remember, people were telling me they couldn't find truck drivers, which when I graduated from high school, there was an overabundance of truck drivers. Just 10 years later, companies couldn't find them. And that was a sign that these demographic changes and attitudinal changes were starting to take place. And now, of course, they're everywhere. We see them everywhere. So politics, of course, politics, let's just look at some of the issues we just talked about. Politics, we've seen a big shift away from the center. And this isn't just happening here in the US, this is happening everywhere. The political center, both on the center left, the center right, has been shrinking. Politics are moving to more extreme positions. That's leading to a fragmentation of political parties. That's leading to a more extreme position of traditional political parties. And what it's doing is it's making it more difficult to enact sensible economic policies that are going to be needed to deal with some of the challenges that we're talking about today. And it's not just internal. It's external. I mean, we've had a world, we've grown up in a world where the US really dominated the global economy and set global economic policy, also dominated global security. Well, the US now has a big rival in terms of China. We're starting to see a more multipolar world emerging where the US is both less engaged globally or in some parts of the region, and where we're seeing, let's say, a breakup of the world into regional blocks. And that is, quite frankly, scary when we think about prospects for the global economy and we think about prospects for global security. So that's certainly a trend we're watching as well. We talked about inflation. We had grown very accustomed to not having to deal with inflation. I remember being a little kid sitting in my father's, what did he have? It was like a Pontiac Bonneville. It was like an aircraft carrier, but I don't know, one of those things. It was, and I can remember as a little kid them talking about rampant inflation on the radio. People still listened to the radio back then, and it was just something. After a while, it disappeared, and we never thought about it. From the late here in the U.S., certainly from the second half of the 1980s until a couple years ago, we never thought about inflation. It never bothered us. Globalization had led to such a decline in the price of manufactured goods, of many of our services. Commodity prices stayed pretty low. Inflation was something we just thought was a thing of the past. Well, that's no longer the case, as we've seen. It's come back. We've seen that inflation can come back when certain circumstances are in place, and it's been destabilizing both for businesses and for the global economy, but for confidence, that this idea that inflation, but we never thought we had to deal with it again. The same holds true for supply chains. This was another product of globalization, really born of the 1980s, 1990s. Remember, before globalization, the global economy essentially consisted of a few Western European countries, the US, Canada, and Japan, and a couple East Asian economies. Now globalization led to everybody being integrated: China, India, Eastern Europe, Latin America, Africa, et cetera. It led to global supply chains, which we took for granted. It was no problem. We knew that we could get our products from China, from India, from Bangladesh, from Mexico, wherever. We didn't worry about it. It helped reduce or eliminate inflation. It helped companies and boost their profitability. But as we've seen in recent years, confidence in global supply chains are now shaken. So the confidence in that inflation is gone has disappeared. Confidence in global supply chains as well has been badly shaken. Now this one has been coming. I've always talked about demographics in my presentation. We knew that working age populations were declining. And they've been the numbers and birth rates that have been coming out over the past few months are just absolutely staggering and concerning. Some examples, particularly in Asia. Now Asia's been the driver of economic growth in the 21st century. China's population shrank for the first time since 1961 by 800,000 people. So it's like the cities of Cleveland, Akron, Canton, Youngstown, Warren, Dover, and New Philadelphia all just disappeared in 1 year. And in China's birth rate is just fallen dramatically. Now, the last time China's birth rate, the population decline was 1961, which, if you know your Chinese history, was the Great Leap Forward, where Chairman Mao ordered people to start making steel in their backyard. They couldn't grow crops or anything, and tens of millions of people starved as a result. Other countries, Japan, birth rate reaching a record low. South Korea's birth rate reaching a record low. Our birth rate here in the US has fallen dramatically. It was always an advantage we had in the US, is that we made more babies than people in other rich countries or other big economies. That's no longer the case. Our birth rate is, I think, 1.6 now. If you don't, just a lesson in demographics, if you have no immigration and you have no emigration, the average woman has to have 2.1 babies in her lifetime to keep your population the same. Our birth rate now is 1.6. So, all right, that what means we're having less young people. That means over time we're going to have a smaller workforce. And these labor shortages are not going to go away. These are here to stay. This is happening all over the world as well. This is even happening in countries where the birth rate used to be much, much higher. India, for example, India's birth rate has fallen to 2.1. India, population's exploding, but their birth rate has fallen to the replacement level in just a few years. We're going to have to deal with this in the future. This is going to be a big issue. And you can say, okay, we're going to automate everything, right? Fine. Who needs workers? We'll just put robots in our factories. But the robots aren't going to buy shoes. They're not going to buy food. They're not going to buy cars. So we're going to maybe the supply side answer we can fix, but the consumption side of that equation is going to be very difficult to handle in the future. Productivity, we talked about. This has been trending down since the 1970s. I just used the German example there, but there are many countries we could use. They all look the same. It's a downward slope. I mentioned solitaire and TikTok videos. That's been the product of the information revolution. This is a big concern. This is, in fact, for me, as big as the demographic concern. We need to boost productivity, and maybe we will. Maybe artificial intelligence is going to do it. Some other processes or new production methods are going to do it, but we have to see it. We have to see it to believe it. So far, the numbers are not that encouraging. Global trade has been trending downwards. We had a big surge in global trade in the 80s, 90s, 2000s. The 2010s, we saw a major decline in global trade. The forecasts for the 2020s are relatively similar. It's a similar story for foreign investment, even more so. Now, on a positive note, a lot of foreign investment is coming into the US right now. The US is actually receiving a big surge in foreign investment because companies in Europe and Asia are very concerned about trade wars. So they want to make sure they have their factories and their production facilities here in place in the US, that they can avoid tariffs and other trade barriers. We saw this before in think about the Japanese car makers. In the late 80s, we're facing a lot of backlash from US consumers and labor unions about the fact that they had won so much market share over the previous decade. What did the Japanese car makers do? They set up factories all over the US. Here in Ohio, we had Honda, you have Toyota, everybody built factories here in the US for two reasons. One, because of the fear of trade barriers, but also because they knew Japan's market was shrinking. They saw the demographic writing on the wall. In the 1980s, professors at all the universities were teaching their students that Japan was the wave of the future, that we needed to emulate Japan. Well, Japan's economy has barely grown over the last 30 years, due in large part to the fact that their population growth has come to an end, and their population is now shrinking by over 400,000 every year. So the Japanese car makers knew in the 80s, we need to set up shop in what's going to be our #1 market in the future, the US, both to avoid trade barriers and to avoid our declining domestic market. We're seeing the same thing now with European manufacturers. We're seeing that with South Korean manufacturers. Chinese companies would love to do so, even though right now that's politically not the most feasible thing to do. But it's certainly something that's at least benefiting the US. And again, as I've said, for Northeast Ohio or East Central Ohio, it's really an opportunity because companies from outside of the US are desperately looking to get a bigger footprint in the US right now. And this is a region where they can come. It's cost effective, it's environmentally friendly, the infrastructure is sound, really an opportunity to attract a lot of investment. So to be aggressive attracting that investment right now is very important. And of course the environment, for much of our modern history, the environment has been on our side. The environment has been something that has allowed us to prosper throughout the Industrial Revolution. And even in places where we couldn't prosper, we managed to create air conditioning or central heating, to allow us to deal with climates like Northeast or East Central Ohio in January, where maybe it's too cold to live. But that's now becoming a bigger challenge. Clearly, we're living in a world where natural disasters are becoming more prevalent, particularly in economic centers. Look what happened in California a few weeks ago. Look what happened in the drought in Europe last summer. I was in Europe last summer. In Europe, I spent over half my life in Europe. It's a wet, gray place if you're north of the Alps. But last summer, driving down the Rhine River, it was 1/3 of its normal size. It was just incredible to see that. In the middle of a drought there. And we're seeing this more and more. It's irrefutable evidence. Me saying the climate wouldn't be changed would be like a Cleveland Browns fan saying like they've won 6 Super Bowls. It's facts. Facts are facts. The world is changing and we need to change with it. And I said this is an opportunity for this region because we are more resilient to this changing climate than just about any place else on Earth. And that's an opportunity for us to take advantage of. We should take advantage of it fully by bringing more investment to this region, bringing more talent to this region. Quite frankly, we need to bring more people, talented, skilled people to Ohio to fill these jobs. That's really going to be important as well. We talked about how economic growth then has been shifting. I've shown this chart for the last 10 years. I show it all the time just to remind everybody. The blue line are rich countries. The red line are emerging markets. And we can see the trend clearly in the blue. Over time, growth is slowing. This is due to slower population growth, competition from emerging markets, et cetera. But the trend is very clear. Again, like I said, if you had a business 2 generations ago, your home market was growing more than 4%, a generation ago 3%, and now in the 21st century, a little bit less than 2%. So companies have had to go further abroad to find growth, but even that's becoming a little more challenging. And that's really the world we live in today. That's some of the challenges we're going to face in the years ahead. So it's becoming increasingly difficult to generate long-term economic growth. That is a simple fact. So it's really going to be the ability to prepare for this challenge of dealing in a world where that automatic population growth and trade and investment growth just isn't there is going to be the key to success, both for a country, for a business, whatever it may be. And sustainability and focus on high growth sectors of the economy are going to be very key factors in the success or failures of economies in the future. Now, like I've said, I think Ohio is very well placed in this economy. It's no mistake that Intel decided to build their facility in New Albany, Ohio. Ohio has a real opportunity here to really, Ohio's been trailing, clearly has been trailing the US, most other areas of the US economy in terms of growth for decades now. We've not matched the growth seen in the Southeast or in the West, even some parts of the Northeast. But now there's a big opportunity. Ohio really, this is the first time, this is the most confidence I have in Ohio's economy vis-a-vis the rest of the US since I've been doing this. I really see opportunities for our state to really take advantage of some of these very challenging trends, quite frankly. The big thing I think is going to be labor at the end of the day. We're going to need to have enough people to fill these jobs. I know I speak at Ohio State every year, and I asked them when I was there, I said, when Intel was negotiating with you, negotiating with the Columbus area to build their new facilities, I said, how involved were you? They told me they were at every single meeting because Intel needed to be reassured every single time that there were going to be enough workers for them if they were going to make this massive investment in Central Ohio. And that's really critical. And it's also critical for this region. If you're looking to attract investment, you're going to need to convince the companies that want to come here that you're going to have the people, skilled and unskilled, to fill the jobs they're planning to create in your region. So that integration between the labor force generators, if you will, so universities, community colleges, trade, how do you call it, apprenticeships, all of these things need to be in place, working with the economic development people, because that is the #1 issue today. Amazon's a client of mine, and I deal with a lot of helping them with their economic forecasting and all, and all they care about is there enough workers? Now they're laying off a few now, but they've got enough. But that's all they care about. It's their #1, #2, #3 issue for them is, okay, we're going to invest here. Do we have enough workers, skilled and unskilled workers? And that's just this is going to be a recurring theme. So the ability to convince investors that you have the labor force in place or will have the labor force in place to meet their needs is the #1 selling point you're going to have in the future. So it's very important that you're prepared for that, because that's certainly what's coming. I'll go briefly around the world like I always do. We'll look at a few things that are happening in 2023 and beyond. I always start in North America. Just as a reminder, the blue line is the average rate of economic growth over the last 5 years. The gray line is the average forecast annual economic growth over the next 5 years. And people sometimes ask, well, Michael, why do you always focus on growth? There are a lot of people these days like to think, well, we shouldn't grow anymore. It's not good for the environment. We need to grow. Imagine our world without economic growth. Imagine a world where we have to cut spending on everything from infrastructure to education to retirement benefits to healthcare to defense, you name it. That's a world without economic growth. We need our systems that we have in place in the modern world we need to generate growth to continue to afford them, to continue to pay for them. Look at how our politics have evolved with what are relatively minor challenges of the last few years. Imagine a world where we didn't have economic growth. Imagine what it would look like. So we need to generate growth. We need to do it clearly in a more sustainable way, but we need to generate growth. Anyway, I'll get back to this. I'll stop ranting about why we need growth. U.S. economy, we're forecasting growth of just a little bit below 2% over the next 5 years. Clearly, this year is going to be difficult, but we're looking at growth of a little bit more than 2% per year towards the middle part of this decade. That's a little optimistic compared to some other forecasters, but we're pretty confident the U.S. is going to be able to do it through consumer spending, through, again, very strong position in high growth sectors of the economy, both healthcare, pharmaceuticals, technology, alternative energy. So the U.S. economy, that's a relatively high growth rate compared to other economies. I'm just going to go geographically around the world. Latin America, no region in the world has done worse than Latin America over the last 8 or 9 years. Almost no economic growth in Latin America since 2004. The big economies have really struggled in that region. Brazil, Mexico, Argentina, Venezuela, all have gone through multiple crises, both political and economic in recent years. An interesting note now, for the first time in its history, the 8 largest countries in Latin America are now run by left-wing governments. It's the first time we've had such a shift to the left in this region. That's led to some clashes between investors and businesses and the governments of those countries. We're actually forecasting a decent year this year with commodity prices being higher. Copper prices are higher. Agricultural prices are higher in some of their key sectors like soybeans because China's reopened its market. So the near-term outlook for Latin America is more positive than it's been in recent years. If we cross the ocean, we go to Europe. Europe's been struggling. To put it in context, in the 21st century, the US economy has grown 1.9% per year. The European economy has grown 1.1% per year. So almost half, just about half, a little more than half of what the US economy has done. There have been some pockets of growth, but again, the bigger countries have struggled to generate growth in Europe, as you can see from this chart there. Of course, right now, Europe's in the middle of an energy crisis. I've been back and forth to Europe a few times in recent months. It's notable how cold the public buildings are. When you land at Amsterdam Airport, for example, it's freezing in the airport. They've turned the energy down quite a bit. A lot of the big buildings, the lights have been turned down. Fortunately for them, they've had a very mild winter. You might have seen some of the reports on TV of the lack of snow on the mountains in Europe. I've seen in the Alps where there's mountains that are always covered in snow, this year being green or gray, depending if they're rocks or if they're high enough just not to have trees. But this crisis isn't over yet. The big fear is that the energy crisis peak is going to be in the next winter because Europe's not going to have the time to fully transition their energy sector away from Russian gas until 2024. So this crisis isn't gone yet. So there's still a lot of concern about the potential for big increases in energy prices. Now they've come down significantly in Europe in recent months, which is good, but still the potential for a crisis remains in place. Central and East Europe, really, again, as I always say, break it into two. Central Europe doing quite well as a manufacturing hub for Europe, but of course, East Europe, the economy is devastated by the war. The Ukrainian economy shrank by 30.5% last year. Obviously, we know the reason why. The conflict is going on. Russia's economy did a little better than expected just because of oil and gas exports to Asia and other parts of the world. But the long-term implications for Russia are severe. Even if the war were to end tomorrow, the long-term implications for the Russian economy, which wasn't doing well before the war, are quite severe as well. Middle East and North Africa, very high rates of growth last year because oil prices were higher. The Saudi Arabian economy is probably the fastest growing big economy in 2022. We estimated it grew by 8.8% last year. But oil prices have come back a little bit, as we know. So we're looking at much slower growth in this region. Again, for most of these economies, their performance is simply down to how high is the price of oil. Nothing more. A few of the more diversified economies like Turkey and Israel clearly have economies that are more resilient to commodity price changes. But for the most part, these economies are dependent upon that. Sub-Saharan Africa. Now, this is a region we've talked about, a lot of economists believe is the key to the long-term future of the economy because its population is going to grow by 1 billion people in less than 30 years. So everywhere else in the world, we can't find workers. Here, there are too many workers. And that's going to be, our company is going to go in and invest looking for workers. Well, you better believe there's a lot of pressure to do so. It's no mistake that the Biden administration had 49 African leaders in Washington a few weeks ago. And who was pressing for that? It was the U.S. Chambers of Commerce, U.S. economic development agencies who want to get more U.S. investment in this region. It's not just the U.S. The Chinese are going in big. The Europeans are going in big. Indians, et cetera. Because 1 billion extra people, that's 1 billion potential workers, 1 billion potential consumers, on top of the 1.5 billion who already live there. So it's the one region in the world where there aren't labor shortages, there aren't going to be labor shortages. And obviously there's a lot of obstacles to overcome in terms of stability, infrastructure, et cetera. But it is a region that if it can be integrated into the global economy, could provide an avenue for growth in the future. Keep moving east. We talk about Central and South Asia, dominated by India. For a lot of businesses, India is supposed to be the next China, the next growth market. But look, just less than 4% growth in India over the last 5 years. That's not what China was doing at that stage of development. So what's interesting is India is now the world's most populous country officially. It's overtaken China now. Nobody knows exactly how many people live in India or China, but the official numbers suggest that now India has more people than China. So for the first time in centuries, China is not the biggest country in the world. It's now India. Both have 1.4 billion, but India's a little more. And here's a region, by the way, one issue we didn't really touch upon, but debt. A lot of debt was raised over the course of COVID. It wasn't just the US government that was pumping money into the economy. It was governments all over the world. This is a region where we started to see the debt crisis, the potential for debt crises rear its ugly head. We've seen it in Sri Lanka, which defaulted on its debt last year. Pakistan is really struggling with a big debt crisis. Even Bangladesh, which is one of the fastest growing economies in the world, is now facing a debt crisis. So we talked about, you've heard me in the past say, it's all well and good if governments or businesses build up their debt as long as they keep growing and they can pay it off. Well, a lot of governments and businesses took on a lot of debt in recent years and they haven't grown like they expected. So now what do we have? Potential debt crisis. And we're seeing, this is a region where we've seen it first. Finally, East Asia Pacific. This is the region that has generated the most growth for the global economy in the 21st century. We've still got some very fast-growing economies in this region, emerging markets like Vietnam, Philippines, Indonesia. A lot of the investment that used to go to China is now going to those countries because of their lower labor costs, their friendlier ties with the US and the West. How this region goes is really going to determine the health of the economy in the coming years, definitely this year. If the US, for example, and other big economies are going to avoid a recession, it might well be because the Chinese market has reopened. Right? They were locked down for 3 years. COVID's now spreading throughout the country, but the market is open again. China's open, consumers are spending, they can travel again. Factories are operating a little more consistently than they were during the zero COVID policy. So if this region can actually generate significant growth this year, it could have a positive impact on the rest of the world and help us to avoid a recession. So finally, what I want to do today is I'm painting, I know it's a little bit of a bleak picture, and I don't want to just be Dr. Doom up here. But what it means is we're all going to have to be on top of our game to succeed in this economy of the future. And what I mean by all of us is it's really at every level. So at the country level, the US is going to have to be at the top of its game to compete internationally. At a regional level, like this part of the world, Northeast or East Central Ohio, whichever you prefer, you're going to need to be on top of your game to compete with other parts of the U.S. attracting investment. At a business level, competing within your own industry is going to be increasingly challenging in this new environment, and even at a personal level. The world has changed, and succeeding on a personal level can become a bigger challenge. So how can a country like the U.S., how can it succeed? Well, how does it measure its success? Is it growing faster than its peers like it has been doing? In that regard, the U.S. has already been relatively successful. How is our level of wealth and purchasing power increasing? Are the living standards of our population increasing? How is our level of stability and security? In some respects, we've done quite well in terms of growth, in terms of wealth. On the other hand, are living standards getting better? We're the only rich country in the world right now where the life expectancy is declining. U.S. life expectancy has declined for 2 years in a row. That's the only place in the world that's happened among rich countries. And it's not just because of COVID. There are many factors there. Stability. I mean, the U.S. has been seen as the safe haven. When there's trouble in the world, investors flock to the U.S. dollar. They flock to U.S. securities, U.S. bonds, whatever it might be. Even that's become a little uncertain. So measuring our success, in some areas we've been very successful, in other areas less so. So we need to overcome as a country a number of challenges. I talked about the demographic changes that we're facing in the U.S., where our birth rate has suddenly declined, where opposition to immigration remains pretty substantial. Competing for foreign investment is becoming more challenging. We've done pretty well in that regard, but it's still a big challenge. Productivity falling sharply. This is a big concern for me. Even though we have such a strong presence in so many high growth sectors of the economy, our productivity levels as a country are still declining. And that has a lot of it has to do with our very low productivity in traditional industries right now. Revitalizing our political systems and our leaders. Clearly, we have political issues in this country as great as anything we've faced since the 1970s, if you go back to Watergate. And of course, environmental challenges. All countries are facing it. Certain parts of our country are facing it significantly. How do we identify our competitive advantages? Well, our talent and our skills. The U.S. still has a preeminent university system among other countries in the world. We attract talent from all over the world. People still want to come to the U.S. High potential, high growth people. Our key position in key sectors of the economy, like I talked about, our resource and environmental advantages. The U.S., of course, geographically, probably the most blessed country in the world. We have such a favorable geographic situation. Most countries would give anything to have the geographical and environmental situation we have. And our level of economic competitiveness, of course, really high. So how do we keep succeeding as a country? We need to better utilize the skills and the talents of our population. Our workforce is going to be shrinking soon. Do we need to raise the retirement age? I know that's a scary thought, and most people aren't going to vote for that. The French, for example, let's pick on the French for a second. They're trying to raise their retirement age from 62 to 64, which is still the lowest among any developed country in the world. What do the French do better than anybody else, besides make wine and cheese? Strike, exactly. They all went on strike. And so they don't want to retire. They want to retire at 62, not at 64. But we need to utilize our talent. We need to utilize our population's talents and its skills to keep growing in this future economy. And we need to have policies that improve our economic competitiveness. It's all about competitiveness at the end of the day. How competitive are we as a country? We need to boost productivity, clearly, and we need to develop a more sustainable economy and a way of life. And it's not just at the national level, it's at the regional level as well. If we look at this region, how do we measure ourselves against other parts of the country? It's, well, how fast are we growing? And as I mentioned, for Ohio, the picture hasn't been good, but I think we can get better. Our wealth and purchasing power versus other parts of the world. We can compare the living standards of people in this region. One of the big selling points for Ohio right now is cost of living. Cost of living is out of control in some parts of the U.S., as you know. You look at real estate prices in certain parts of the U.S., you compare them to Ohio, you can really save a lot more money and have a good standard of living here, not sitting in traffic for 2 hours a day like you would in Atlanta or in Phoenix or Houston. And our ability to attract talent, that's going to be very important. We don't have the internal population to do it ourselves. We just don't. Our population is getting older, it's shrinking. We need to attract new talent to this region, and that's going to be absolutely imperative. So again, for this region and for much of Ohio, the big challenge is demographic. Companies want to come here. There are many reasons why they would want to come here. They just don't know they're not sure they have enough workers to fill their jobs. We're competing both on a global stage and a national stage for for investment, for trade, both in terms of exports and bringing investment in. We also need to overcome productivity. Ohio's productivity numbers are not good. Quite frankly, our productivity numbers are not good. Our political system and leaders face some of the same challenges that they do in other parts of the country. And of course, environmental challenges, which I said in this region is a big advantage for us. So again, we need to have a higher level of talent and skills both within the population and the population we need to bring into the region. So we need to attract more people, skilled and unskilled workers. We need to improve our position in key sectors and industries. Think about the industries that are going to grow in the future, like healthcare. Cleveland, of course, is a center for the healthcare industry. We have Intel coming in with their massive facility outside of Columbus. We have massive investment in EV. We look at what's going on in Lordstown and other parts of Ohio. So in many sectors of the economy that we expect a lot of growth in 10, 20, 30 years, this is a region that's actually starting to really improve its footprint in those industries. And that's a reason for optimism. So again, we need to utilize the talent. We need policies to bring in this investment. I think our governments realize that. I think our governments are starting to do a pretty good job in Ohio at doing that. We have some of the best. I deal with economic development agencies all over the US, and I think we have some of the best economic development groups that I've dealt with right here in Ohio. So that's a very positive sign. So it's not just the region. OK, we looked at a country. It needs to improve its productivity. Regions need to improve their competitiveness and productivity. They need to improve their competitiveness. The same thing is true for businesses. How does a business measure its success among an economy with all those challenges I talked about? Well, is it growing faster vis-a-vis its competitors within its industry? Does it have a presence in sectors of the economy that are going to grow in this future economy? If you're in an industry, for example, your key market is young people in Japan. Good luck, right? The Japanese aren't having babies. The Japanese youth population is collapsing. So you're not going to grow. You need to be in sectors of the economy that are going to give you long-term growth. So if your business is in a sector where the future is uncertain, you need to start looking at diversifying into sectors that are going to provide growth. Are stakeholders, and investors confident in your business? Is your share price going up? Are people willing to invest in your business? And of course, your ability, and this is hugely important, your ability to retain and attract talent. It's becoming ever more difficult to do so in the modern world. Young people have a totally different attitude towards work than previous generations. And it's not just, let's just not pick on young people. Older people have also left the workforce in huge numbers in recent years. The labor participation rate for people between the age of 55 and 65 has fallen sharply in recent years. So we're blaming young people for a lot of these shortages. It's not just young people. It's people towards the older end of the age spectrum. I have to say that properly. I'm not up there yet. I don't want to offend anyone. Getting there, but yeah, one of these days. So businesses have a lot of challenges to overcome in this climate. Number one is talent. Everyone's facing the same problem. Where do we find enough talent? Competition is not just local. It's national. It's increasingly global. Productivity is declining at the business level as well. Revitalizing management and direction within a business is key. And then managing sustainability issues. This is going to be a big issue for the rest of your business careers. Managing how you deal with social issues, environmental issues, governance issues, all going to be very important. So how do you identify your competitive advantages? You look at your talent and your skills that you have. If you don't have enough, you bring them in. You try to bring them in. Again, gain leading positions in those sectors of the economy that are going to grow in the future. Improve your processes, your systems, and boost your productivity, your competitiveness within your industry. So being prepared. This is for me always, what happens whenever there's an economic crisis? What do businesses cut? They cut their analysts. They get rid of their research, all the things they need to prepare for the next crisis. Trust me, we sell economic and political research and forecasting. As soon as there's a crisis, budgets get cut all the time, which is completely wrong. Businesses need to be more aware of what changes are coming in the future and to be able to prepare for those. Focusing their investment on high growth sectors of the economy, of their business, improving their productivity, and being more sustainable. It's not just a business. Finally, it's an individual, each and every one of us. You're here today. You want to know what's happening in the world. You want to know what's happening here in the US. So you're learning, you're understanding what's happening in the world. So how does a person measure their success or failure in this future economy? Are they being properly rewarded for their talents and their skills? Are they adaptable to changes to the economy, these changes we talked about? Are they able to achieve a high quality of life? That's extremely important. And are they having a positive impact on the world around them? So what are the challenges? Finding a proper outlet for your skills and talents can still be a major challenge. Even though there are labor shortages today, just matching skills and talents with the right outlet for those skills and talents can be a big challenge. Even though, and I tell young people this, you're entering the job market at the best time ever. Unemployment rate is 3.5%. Wages are going up rapidly. You can negotiate so many perks and benefits. Once a company shows an interest in you, there's still challenges. There's global competition for jobs now. There's still those challenges to overcome. It's very difficult in the modern economy to maintain skill sets and knowledge bases. Things are changing so rapidly. So for those people who would go to university, learn something, and just use that for the rest of their career, it's not so easy anymore. You need to constantly be relearning new skills, expanding your knowledge base all the time. And then, of course, if we look long term, can people still manage to improve their financial position in a more challenging economic environment? They have so far. Stock market's great, real estate's gone up, people have managed to improve their financial position, but is that going to continue in this more challenging economy of the future? So how does an individual identify their competitive advantage in this new economy? Well, do you have skills and talents that are going to be needed in the future economy? Some of you do, some of you may not. You may need to rethink your skills and talent level. Are you in a high growth sector of the economy, or are you in a sector of the economy whose future is severely in trouble? This was certainly something I thought about early in my career. Do I want to be in a certain sector that I'm in? It's also going to be important. And then your network. I think that we're in a world now where networking is more important than it's ever been in establishing a network. You're all here today. Many of you are meeting each other. You meet each other at these type of events. Extremely important. Your network in the future is going to be hugely important. So always improve your skills, always improve your talents, your knowledge base, and establish networks in key sectors of the future economy. So I deviated a little bit there. Usually I'm just talking about numbers and boring stuff, but I thought it's important every few years to talk about how we can prepare as individuals, businesses, regions, or as a country to deal with all of those challenges that I laid forth earlier on. Because it is going to be a challenging world. Clearly, we face a lot of headwinds as a national economy, as a regional economy. But if we're better prepared than our competitors within our industry, within the US, within the world, we can succeed in that economy. We have a lot of opportunities to do so. So clearly, a series of major challenges that we're facing in the 2020s and beyond, but they can be overcome. And it's really going to be down to competitiveness. How competitive are we as a country, as a region, as a business, as an individual? And preparing for these changes is absolutely key. Understanding what changes are coming, preparing our economic policies, our business plans, our personal financial plans, whatever they may be, absolutely paramount to success in this future economy. So that's it for me. That's my contact information. If anyone wants to reach out to me, learn more, if they want to learn more about ISA or myself, if anyone has questions they don't think about today. But I guess we have time for some questions now. You've got one there.
Quick comment or related question.
He's got it. She's got a microphone. Sorry, I should have given you some warning.
As I said, a quick comment and a related question. The comment is, of those nations that are losing population, China, Japan, they aren't particularly welcoming to immigration, which can help.
Sure.
And you didn't mention a couple other countries which aren't in the same category politically as those two, but Italy's losing population, Romania's losing population.
Yep.
The question is, back in the 90s, there was a real rush by American-based companies to set up shop in China. Does that just come to a complete stop, or is it still happening?
Well, first of all, you're right. The demographic decline is happening in many places. Europe, clearly. Latin America, increasingly, we're seeing the demographic decline. East Asia. It's happening in most all. Birth rates have fallen dramatically in just about every part of the world. So even those places that aren't seeing it now will be seeing it in the coming decades. So that's true. As far as China is concerned, the big surge in investment in there went after it joined the WTO in 2001. So in the early 2000s, huge amounts of investment. The narrative is that companies aren't going into China now. The numbers suggest a different picture. You look at the foreign investment numbers going into China, they went up 14% last year. So some businesses are still investing in China. The narrative is they're
Still mostly U.S. businesses, or maybe from Western Europe?
all over the world. Because in the U.S. and Europe, the narrative is more we're gonna start pulling back. But the reality is it's a slowdown. But is it a complete stop? Absolutely not. It could still become, because like I said, this is the one issue Republicans and Democrats agree upon, is being tough on trade with China. So you're going to see more restrictions there. But our supply chains right now are so dependent upon China that a full withdrawal right away. This whole idea that businesses are going to come back, reshoring all of this is a long-term process. This isn't something that's going to happen in 6 months or 12 months. We're talking decades. So you're going to start to see a slowdown. I think you're going to see companies trying to reduce their position in China, but it's going to be a long, long process. We're so integrated with China right now that just will not happen. Without a political fallout, some dramatic political situation like a war in Taiwan, for example, it'll be a long process. I can hear you from here.
I'm kind of curious what might happen to our economy if Congress continues to putz around with spending cuts and the debt limit. And are there examples of large economies that have defaulted on their debt?
Large developed economies in modern history, no. It's been your Argentinas, your Sri Lankas. I'm not putting those countries down. I'm just saying that's the level of, those are the size of economies and level of development of economies that have defaulted. Yeah, our Congress is dysfunctional. It would probably be the best word. We get in our own way. I've always advocated that the biggest challenge to the U.S. economy is our own political system. We have so many natural advantages as an economy in terms of both our environmental situation, natural resources, high-tech sectors, all of that it really takes our politicians screwing things up to interfere with that. The debt ceiling is a bit of concern. I think June is the date where we could run into trouble there. A lot of economists I know are very concerned about it. I've always taken the view that we'll eventually we'll muddle a way through, but I'm not certain that's going to happen this time around. So it is a concern. That's going to be coming at a time where we're expecting the first quarter numbers to be significantly worse, second quarter numbers. So it could come at a time, really the worst time, where we would just be entering a recovery in the second half of the year, and then the Congress gets in the way. So that's my biggest concern, what it does to confidence levels in terms of consumers and businesses. So yeah, all those things are a concern for me. It's not an accident that Congress's approval rating is what, about 14%? So.
Thank you. The one thing that we've talked a lot about growth, all over the world, but really specifically, I care most about the U.S. where I live, right?
Sure.
I was talking to him next to me, and I think about the child care portion of both parents now work.
Right.
It's a big factor. A lot of, let's say, I don't mean to be stereotypical, but a lot of mothers would always typically stay home traditionally, right? A lot of mothers are going to work now. If I'm the government, and I'm just Lucas from Kempspec in New Philadelphia, Ohio, definitely not Dover, but
here we go. Is this the New Philadelphia half and the Dover? How's that?
Definitely Dover over there. We don't cross the river, but only for these certain days in the year. But if I'm the government thinking about these things, and it's such a challenge, I know we have to grow, and this has to be a big focus. There's one thing, like, where government, sticking their nose in something's business it might just be that, but they've seen this for so long. How and why wouldn't they have done this far before now, before it's just a real concern?
Sure.
Like, hey, listen, let's put our monies, whether it be like, well, one, certainly childcare. How do we give these people the help needed, whether it's tax breaks, but whatever,
Right.
you got to make sure these kids are safe and taken care of correctly. But so that both all the families know, we feel good about this. We can go to both work and make babies and not have to worry about this, because they're thinking with their pocketbooks always. See
Yeah.
where I'm going here? And
Yeah, absolutely.
I mean, is there any thought? Do you hear anything
Oh, yeah.
regarding those sort of
Well,
things?
there's a good, let's go, I picked on the French before, let's give them credit for something now. The French France is one of those countries that are obsessed with their demographics. And their birth rate had been below that of the US for since the war, really. And they realized that. They started investing huge sums in childcare, realizing that most mothers were working now. It was two-income households. And so they invested huge in childcare, in education for young kids, allowing them to stay at school, stay at lunch, and all of these things. And it didn't allow their birth rate to bounce back, but it kept it from falling further. And now the French birth rate is higher than the US for the first time in probably a century. Right. So they did what you're suggesting. It prevented the birth rate from falling further. It's allowed people to continue to have, many families have 2 kids, which is what they're doing. And yeah, it's had a positive, at least it stemmed the fall. Whereas here in the US, where we haven't invested, like you said, our birth rate has fallen precipitously in recent years, and quite frankly doesn't show much sign of changing. And you're right, if there was a system in place where families could be confident that, okay, both of us can work, our kids will be taken care of, you would probably see the birth rate tick back up, or at least stop falling like it did in France. And there's a few other examples. That's just the one that comes to mind. But I agree wholeheartedly. If I were setting economic policy at a national level, I would undoubtedly be investing in childcare, youth education, just allowing families to feel comfortable having multiple children. It helps stem the cost, obviously, because childcare costs are going up exponentially, as many of you know. And we're doing next to nothing about it, and that's a shame. But of course, we're spending almost $3 trillion a year on Medicaid, Medicare, Social Security, which is just going to continue to go up. So we're not focusing much money on youth spending, but on our elderly spending, we've gone from extremely low numbers 30 or 40 years ago to $3 trillion. Our Medicare, Medicaid, Social Security spending by itself would be the world's 6th largest economy. Let's put that in perspective, and it's just going to continue to go up. So, yeah.
Michael, you had one slide on the UK that you didn't speak much to regarding political and economic crisis. Can you just talk about that a little bit?
Yeah, the UK has been struggling. The UK United Kingdom had been the key driver of economic growth in Europe for much of the early 21st century. Really going from crisis to crisis now. We've just replacing prime ministers all the time. Was it 5 in the last 6 years, I believe it is, or 4 in the last 5? Sunak, what was her name again? May before that, Johnson. No, who was there for, what was her name? Liz Truss is the one I'm forgetting. And then, but yeah, so there's a bunch of different prime ministers. Their economy's been doing pretty badly. The forecasts are pretty bad. Their inflationary pressures are higher than most countries. They're more dependent upon gas than most other European countries, and they don't have the capacity to store it. So it's a lot of turmoil right now, and that's a problem for US companies, for Asian companies. Where did you go when you invested in Europe? You go to London, you set up in southeastern England. And now, because they left the European Union, there's all this uncertainty over the future relationship between the UK and the EU. What had been the most successful big economy in Europe is now suddenly looking a bit like a basket case in recent years. I'm pretty confident they'll be able to bounce back over the longer term. I think the UK, London is still the center. We talk about the companies are looking for talent. There's still more highly skilled people around London than anywhere else in Europe. But it's undoubtedly been a difficult 3 or 4 years for them, and will be. The near term doesn't look good, certainly. Their central bank is predicting they're going to be in a recession until the end of 2024, if not the beginning of 2025. So pretty bleak.
I probably already know the answer to this question, but investment in technology. Ohio doesn't have the broadband access that we should have, and we've kind of been focused on that locally. And the state has been focused on that too. How much investment do you think it should be a public-private partnership? Because we have a lot of areas that are not covered by broadband accessibility.
Right.
So there's been a huge push for that. Right now, as you talked about Intel and what they do, and Jobs Ohio just invested $40 million to do some broadband expansion, but we still have a lot of areas, not only in Tuscarawas County, but all across Ohio, that needs more accessibility, reliable and affordable. And when you talk about other parents or the spouse working from home, if they live outside an area that they have no accessibility, that's a deterrent for another opportunity to be able to, again, do the workforce and the things that you've talked about.
Yeah, that's a great point. I mean, that's an area we need to focus on and focus on quickly, because that again goes back to the competitiveness issue. How competitive are we as a region or as a state if we have vast areas of the state that don't have proper communication networks? So any type of investment we can get in that, I would encourage. We need to do it as quickly as possible, because like I said, I really feel like these next couple of years are going to be key for the state of Ohio. We have an opportunity here like we have not had at any point in our modern history to attract investment to our state. And I think Intel can just be the tip of the iceberg of that. But we focus a lot on labor, but I'm glad you brought that up. Our infrastructure, and in this case, our communications infrastructure, could certainly use a big investment. And that's the type of infrastructure we can do quickly. It's not building new highways or building new rail networks, whatever. That's something we can invest in and have an immediate return on over a short period of time. So that's a very good point.
I think we got to edify and build up our young generation. My grandson's a senior at Kent State, straight A's in Kent, Ohio, and they don't really know where he's going to do. So we have this job. I've been in real estate for 43 years, got a business management degree, big deal. But this is my work ethic, my job that I've done for a whole life. But these young kids, we need bricklayers, we need our schools in the 8th grade on up, and we're working better. But in Tuscarawas County, we do have a great work ethic. It's a great place to live. Cost of living is reasonable, and we've got a lot of growth potential right here. But I think with all the great universities we have in the state of Ohio, and our average sale price is only like $259,000. That's the highest it ever was in the state of Ohio history of 88 counties. In Tuscarawas County, it's 197.
Right.
So our cost of living is reasonable right here in what it is. But we've got to build these young kids up. 54% of the people are divorced in the United States. We have one of the highest divorce rates. But we need to build them up to show them, hey, 8th graders on up. You can get a job bricklaying. You can do whatever. We need you, and we got to get out there more. We're all busy running our companies, but we need to be out there more telling these young kids that we have a job for you. Yeah, I think it's right here with the Kent State people sitting beside us, and we need to tell them, hey, you need to go get if that's what you want to do. But some people are great. I can't lay drywall or do whatever. We're losing all those good Italian people that came here and laid tile. That was the people in our generation. Their shoulders are out. All these people, we need that to build these people up, our young generation. There are jobs available. Get your education, and if you don't want to get your education, you can still, be carpentry work, and we need that, and we got to promote that more in our area. We really do.
Well, the attitude towards careers has undoubtedly changed. I mean, when you look, I do a lot of coursework at universities, and you see their outlook on their future career is so much different than previous generations. They're looking for experiences. I think I mentioned this last year. I spoke in Spain a few years ago, and the head of the London Business School, which is the top MBA program in Europe, spoke before me. And they do a survey every year of new students. How many jobs do you expect to have in your career? Different jobs. And in the 1970s, it was 2. Today, it's 12. And young people expect to bounce from job to job to job. It's about experiences and gaining experiences, there are many reasons for it. It's not just that. It's the transparency. And back in the day when we had to look in a newspaper to see what jobs were available. Today, you can find a new job on the internet in 10 minutes if you're talented, or on LinkedIn, whatever you're doing. So the attitude has changed, and that's a challenge for businesses now as well, because you find talented people, you bring them in, you train them, and by the time they're ready to be productive members of your company, they're looking for their next gig. And that's real reality in the 2020s.
I have a follow-up question from Jeff. The productivity rating, how do you collect that data? And it made me have an aha moment that we should do that locally.
Well, the state of Ohio is certainly doing it. I mean,
Right.
there are many, productivity data is probably the hardest of the big economic pieces of data to gather, calculate, and really trust. It's two big components. You've got a labor component, which is relatively easy to measure. The more difficult one is the capital component. The positive thing in terms of labor, in terms of productivity, is while the labor component has been declining, we've started to see over the last few years an increase in capital spending. And that doesn't have an immediate impact on productivity, but it does down the road. And certainly in the US, we've seen an increase in recent years in CapEx. So that's a sign for maybe some optimism for productivity in the coming years, because capital expenditures have been going down as a share of the economy for decades. So that might be one area where we see some positive development. On the labor side, it's challenging. It clearly is. I don't see how we can really revitalize that side of productivity, frankly, at all. It's going to have to come from capital expenditure. It's going to have to come from technology to revive productivity. And I don't know the specific county level data on Ohio. I've never really looked at that, but it may well, the state of Ohio may well be putting something together there.
So the question I have is, we're, I think, probably a little bit different than a lot of people in this room. We're an importer of chemicals.
Right.
We'll be a small to medium-sized company, but in our market, chemical distribution, I mean, it's a giant business, right,
Sure.
with giant companies. And a lot of that's just supply-side economics in North America, simply because chemicals are not made here.
Right.
Right? So for a variety of reasons, oftentimes China, India's growing.
Yep.
I guess my question, I think we even asked this last year, is, you know, with the Rhine drying up and you have Dow, you have BASF, those large chemical manufacturers, do you see people investing or thinking about contemplating investing more in North America, Central America versus Asia, which is where most chemicals are made,
Yeah.
and we're dependent on them?
I think you definitely are. I think a lot of European companies are increasingly concerned about their environmental situation, about the ties they have with China. So you are seeing, and I can't say specifically for the chemical industry, but in a lot of heavy industries, you are seeing European companies really looking at investing in the US right now. A lot of this surge in foreign investment I talked about is coming from European manufacturing companies into the US. We've seen it over the last 12 to 18 months, a pretty big surge, not just in actual investments, but in, let's say, public announcements of they're considering now investing. A lot of that has to do with trade concerns. A lot of European countries are concerned about, for example, our Inflation Reduction Act, which will make it harder for companies outside of the US to get government contracts and whatnot in the US. So a lot of these big manufacturing companies are looking right now at coming into the US. I'm pretty confident that we're going to see a surge in investment. We've already started to see it. I don't think that's going to stop over the next few years, in industries like yours and in others as well. So. Mexico possibly as well, but Mexico is facing some of the same labor shortage issues we're facing. The Mexican population, their birth rate has fallen dramatically as well. So their unemployment rate, as you saw, was less than 3%. So we're even seeing in Mexico, which should have, you think back to the 90s, should have won more investment than it did. I mean, a lot of the focus in the political campaigns is jobs going to Mexico. They went to China. Mexico gained a little bit, but nothing as much as China did. So Mexico will certainly stand to gain as well, but I think the US and Canada, US especially, has a big opportunity here.
What are your thoughts in regards to China and its relationship with Taiwan?
Well, China it's been expressly stated by President Xi that Taiwan will be part of China before 2049, which that would be the 100th anniversary of the communist takeover of China. That's only 26 years away. Will they make a play? I don't think they could take Taiwan right now, quite frankly. I think from what I've read from defense experts, they're pretty confident Taiwan could repulse almost any Chinese invasion right now. It would be costly, obviously. It would be devastating for Taiwan and China's armed forces. It would be devastating for the global economy. But I do sense a growing determination, if you will, from Beijing that Taiwan will be brought back into the fold at some point. And clearly, in the past, I think Beijing believed that it could do so without invading Taiwan, that there was a large enough share of the Taiwanese population that would want to join with China. That clearly has changed. I mean, all polls that we've seen in recent years show a vast majority of people in Taiwan don't want to be in China. So the potential for a war is substantial and is going to, in my opinion, is going to continue to increase.
But tactically, how can they get to Taiwan?
Right, right.
I mean, you have to cross the South China Sea with Japan, Korea, and the United States all having navies there.
Right, right. No, it would be difficult. And most of the, I mean, the U.S. military does war games on this all the time, and in most cases, the invasion fails. So. Yeah, it would be, and I think they know that. But of course, they're spending $270 billion a year on defense, which is second to only the U.S., which spends $780 billion a year, and that's going up, 5-10% every year. So that their defense capabilities are going up and up. It's why one of the reasons why people ask me where should we invest for long-term growth. I say healthcare and defense, because those are the two sectors that are going to grow for the rest of our time on this planet, at least. So, yeah. Yep.
My question pertains to not so much in your slide, but spin off from COVID. When COVID hit, it brought people still had to work, right? We had to be clever, a lot of Zoom, Teams, things like that. So a lot of people and businesses saw, hey, we can still be productive, work from home. It now has affected the workplace from people going into work, whether it be in the cities or just anywhere, right? Do you see, or from anything your team does, in regard to a futuristic look on how companies are looking or thinking? Are they still thinking hybrid from the future, or is there any more sense of, hey, it's the government seeing it now too, where a lot of these office spaces are now being obsolete?
Yeah.
What do we got to do to get them back in the office? Or is there, hey, companies are smart enough to know, hey, we need less square footage now. I don't know how to correct it, but is there a thought there? And
well, I'm
convinced
that at least the hybrid method's here to stay. I mean, young people, like I said, have more power than ever looking for jobs, and one thing they want is flexibility, and that includes where they work. I was in downtown Cleveland yesterday. It was a ghost town. 3 o'clock in the afternoon. I saw 2 people walking the entire time when I was downtown yesterday. Commercial real estate's taken a huge hit. I know Sherwin-Williams, of course, are building that new headquarters in downtown Cleveland. They've already downscaled it because they expect only a certain number of their employees to actually be there. Commercial is all over. Many of the big buildings in Cleveland and other parts of the world now just are so underutilized because people don't want to come back, and companies are trying to force them. We've seen a lot of companies in the banking sector, the tech sector, saying you have to come back to work now. And workers, how did they respond? They got up and left. They went to a competitor. Okay, they might have got laid off last week on the tech sector layoffs, but at least when they moved, they don't want that anymore. And our company has always been remote from our days of our founding, because our clients are all over the world, it didn't make sense to have one central office. We were prepared 20 years in advance, I guess, but I don't see it coming back. The old way of working is done. Some companies will try and bring it back, and in some cases, I believe it is useful at times in office, being together, interacting with people, but the days of 5 days a week, that's over for most industries, for most businesses. The workers have more power than ever in this future economy, where labor shortages get worse and worse, and if they want to be flexible, they're going to find a company that'll accept that. So.